Good morning. Well, yesterday was what was expected to somewhat with the bond market closed was just a go nowhere day. It was an inside day there. It started a little lower, but recovered, got above the opening price, but just didn't go anywhere much after that. So it's in a consolidation here for the last week, which started with the wrong way option traders getting on the wrong side as they always do. Once in a while they get it right, but look, this time it's not dropping. So I kind of wonder, this impeachment circus starts tomorrow, and you never know what's going to come out of that. So I suppose there's uncertainty related to that, but just ignoring the news as we try to do, we've gone over the fact that the markets had a nice run off of the October low. 5 weeks, of positive gains. And, so slowing momentum here, right? That's what happened last week. The momentum slowed down. Yeah, so Trump's going to speak. Alex is pointing out Powell's tomorrow. So the news-driven circus continues. But as technical traders, as best we can to keep those thoughts away, it's almost impossible. I mean, they do affect, others and the thinking and so on. But, historically, it does make sense to try and discount that and just say, what do the technicals say here? So unless there's some disaster that comes out, which of course is possible, then the markets would tank, but that's money management and stop losses are about. So right now we have uptrends, bullish uptrends, and bullish sideways consolidations for the moment. Bar by bar analysis, topping tail has been ignored for the most part. There's a little downside action, but no damage done. We got the swing here into the gap fill, which is exactly what we were looking for on this day, saying looking for it to come down, gapped up and couldn't go. So, you're looking at this, if you could imagine an image of a line chart, you've got pretty much of a straight line up with little wiggles. And right now it's just going sideways. So no big deal. It's just boring, of course. There's little movement and we'll see how long it goes on. Let's take a look at today isn't a 0 day to expiration, but yesterday was, and the market did perfectly what Wood needed to do for spreads to go to 0 on one last date of expiration for the SPX. So it may be more of this, let's see, into Wednesday. I suspect that Wednesday, with this talk going on, the market may just want to chop sideways, waiting for more information. So, speculation, but we'll see what happens. Diamonds, gap down and was bought. Right. So this was where the strength was yesterday, comparing the small amounts that movement that there was, but it gapped down to where it was made sense to be a buyer or considered to be a buyer. And then it went up into the resistance and died. Right. It's going sideways here. As you can see, there's a little bit of data in the grayish area is what's happening pre-market. Spiders. Same story, pretty much. Not as bullish as the Dow was, but as we mentioned, I think it was last week, expecting the Dow to play catch up. And, that's what it did. And now things are they're going sideways. So the focus here is to restrain yourself, stay out of the chop. And that doesn't mean certain stocks aren't moving, but just, what I was looking here, there's a few things that were gapping and moving, but a lot of the stuff here is small little moves here. There's some bigger stuff, but moreover, there's a lot of smaller things going on here. So probably just more chop. Qs, inside day, sideways price action. We can drag this up there, give or take. So I hate it when I see a support level right next to another support level, because that just means that is more likely to be choppy. But if things start to come in, let's entertain excuse me, a red day or a red morning. So maybe some downside action since this is the top of the trading range here. Excuse me. S&Ps, same thing. Overall, it's just a wait and see of what's happening there. Let's scrunch it up and you can see, bottom of the range. The other was right here. It's a little downside shakeout and it's getting tighter, but bullish trend, but slowing momentum. This is, I don't want to say the word confusing because I'm not confused. I see slowing momentum and I'd rather have momentum where things are moving versus sitting here waiting for some event, something substantial, which, is not happening here. A gap above this range tomorrow or a gap below this range tomorrow, or at some point with a weekly that suggests a pullback. It's only the beginning of Tuesday, but, slowing momentum, maybe we do get a pullback, which is be nothing wrong with that to have some type of a pullback toward a support level into this area that would be viable based on uptrends. And Qs, same story. Don't need to go over it. Sideways price action. Well, it is, yeah, McGraw, it is constructive because anytime, so when we look at prices, price patterns, we have to bring our analysis to it, of course. Well, what makes it constructive? Well, the fact that it is that it ran up, right? It's not like a momentum move. It's not a climactic move to the upside. It's more of a plodding kind of a climb the wall of worry move, right? There's that adage of climbing the wall of worry. Well, what does that mean? What does that look like? Well, what it means is it's not running straight up, right? This was an initial run straight up and it's like, oh, I'm not so sure. Maybe I am. I'm not so sure. Maybe I am, right? Chop, chop, chop. So as it does move up, the fact that it goes sideways rather than pulling back to some, say, more significant reference point of support is very constructive. But in the end, eventually it's got to break out to the upside because if it breaks down to the downside, then we say, oh, that was distribution. Yeah, buyers are showing up. And that's the fact. As long as they can get it above the resistance, then we say, okay, they've really won the battle because sellers are showing up here as well. And let's just assume equal amounts because it's just going sideways. So right now, buyers are saying we're in control because it's an uptrend in multiple time frames. At some point, it's like, okay, you got to get to the last round here and break it out above the top of the range. Otherwise, sellers have won. So, eventually it's either break out or break down or, let's hope not, some kind of a shakeout. So we'll see. Ideally, right, we've also used our market internals. So yesterday, the wrong way option traders started backing off from their bullish bias a bit, not to a point where it's like, okay, we're out of the woods here with those idiots doing what they've done. But ideally, this comes down some more. And with this chop that's going on, breadth is deteriorating here. So that's not a positive. So there's underlying deterioration. Sentiment has reached the extent that it did, and that has to get worked off. And for the moment, it's getting worked off sideways, which is constructive as long as that continues. So we're kind of like in a holding pattern here. Anyway, Dow, futures. So we don't have the gap reversal. We've got a bottoming tail bar, closing prices, opening closes at the top of the wide range bar, bullish, sideways price action on the hourly. It's a wait and see. Right. So yesterday we went over the fact that, and we've been talking about this Russell. And we'll take a look at the ETF, top of the range. It makes sense to have a pullback. So if we get some kind of pullback going here, yesterday I mentioned the Russell would be the go-to one because it's the most vulnerable to a larger drop, which really wouldn't have hurt things much on the higher time frames, but intraday, that would be the one that has the better opportunity because of the momentum move and the sideways price action, but it's not breaking down, not yet. So wait and see, holding pattern. Same conclusion here in a different market. So looking at the ETF, you can see the sideways stuff. It looks a little different here. Same trading range, so on and so forth. It can keep going sideways. I've constructed what it's got to break out. And oil holding up. Looks like it's trying to get to the top of the range. Right, bar by bar analysis tells us red bar ignored. Was a big red bar, turned into a topping tail, and now it's just quiet time within this range after clearing this high. Trading range on the hourly, getting to the top. Can we break it out? It should, right? Based on coming from off the bottom of the range, and this sideways consolidation and this bar by bar analysis suggests it should get through the top. So set an alert up there. And that obviously should be and would be constructive for the ETFs and the oil related stocks. Now, bonds here, chopping around. They're in a downtrend. They've broken down. The market likes that. It's one of the things that's holding the market up there. But, you know, this big down day. And so it's like, okay, buyers, you're using up some of your bullets here. You're starting to drain the tank a little bit. This is getting a little, well, it's a little extended. It's going sideways. Ideally, it drops down to this level. But once it gets to this level, buyers are going to show up, right? Just to cover shorts or whoever wants to own bonds, right? That's going to be the place to do it. And if it starts to bounce, the equity market is going to take notice of that, and it's likely to decline a bit. So there we'll measure the reaction of this support. Does it break through it, right? I said that buyers will show up, which they will. Will they show up in enough force to drive it higher? And if they do, well, that's probably going to put a little pressure on equity. So you want to keep that in mind. Gold, right, broke down under its support here. We got that wide range bar last week, which opens up the door to lower. It's kind of hanging there, okay. You know, but there's going to be, well, there isn't much interest here as long as equities are holding up. So, you know, we've got to get these intermarket relationships that are going on at this moment, but some buying going on here, a little bit of a bottoming tail, but nothing to get excited about. You can see it's kind of building a little base here on the hourly. And silver, pretty similar, right? Building this little base here, wide range wide down, holding up here for the moment. And the last, well, what are our transports doing? Holding up pretty darn well for the moment, but at the top of the range. So we've got this bullish move up, like that was a bullish move up, and that went all the way down. So some chopping around here. It's holding. Like the last time it had this blip V top and just dropped, and whereas, you know, right now it's chopping sideways like everything else is, and everybody's, is this really it? Is Santa coming? Is this the end of year rally? Can we break through resistance? Is China going to say something, or Trump, or now this impeachment, whatever. So, you know, don't be the frog in the blender in this stuff here. Stay out of trouble. And so the spreads stuff, which Dan will cover, that's been doing okay. And that's kind of the market. This is the kind of market lately anyway. There's always a market for those of you when you find them. Sometimes the premium's not there, but this kind of choppy stuff lends itself to credit spreads. So, all yours, Dan.
All right, thanks. Yeah, and I think I copied you on this email, Greg, looking at IYT. We had one subscriber say, hey, what if it takes out this little bottoming tail? Wouldn't that be what he called very bearish? And I said, no, you know, sure, it could be a call spread idea, but with those two powerful bars and a breakout on the weekly, I said, it's not a directional short by any means.
Are you talking about that one from last week?
Yeah.
No, I mean, it would almost be, it's pretty bullish that this gap down yesterday was bought in the area of that bottoming tail bar, but it could break that and it wouldn't be that big of a deal.
Right. That was my exact point to him. Yep. All right, all our opens are fine, so let's go right to gappers. There's a ton of earnings stocks today. And as Greg said, yeah, a lot of them are kind of light volume and stuff, but we'll go through them anyway. What do we got here? LTS. Gap's too big, 345. Look at that. Look at that. I mean, it's a retest W pattern. This middle kind of went a little deeper for a textbook W, but nice retest there. Wow, with a price void. But I got no interest in that. AMRN 1948, so it's gapping way up here. Now you all know I like just saying what ifs just for educational. If this were gapping just to the high of these red bars, low 18s, then it would be a tier 1 gapper, because it'd be a breakout and negating 3 bars here with a price void on the weekly with a target of 20, whatever, 21, 22. The gap's too big for me. Vodafone gapping up here. It's an ADR. Telephone, it's too extended. CSIQ 1710. There's no pattern there. That's just a gap in a downtrend. No shock pattern. CBS was up. Now it's down. 3870. It's a bottoming pattern. We'll keep an eye on it. OGI 272, a bearish gap. But I don't short those cheap stocks. TTD was just a leftover watch from yesterday. I like the WRB. If we get a 1, 2, 3, then tomorrow we'll buy the high. And we can also watch an intraday pullback. And I checked yesterday for a put spread on that, but there was no juice. It's hard finding good juice now with volatility so low. Like in our weekly options trader, I had Microsoft as a put spread, and we didn't get the juice. There was a couple of them in there. We'll go through them within the first hour. Pace C was one. Breakout of reverse head and shoulders. Let's continue here. All right, so SE we'll watch. TME. Gapping under 14, no patterns in the middle of a range. JCOM 9750, bearish gap. This was a beautiful 180 reversal right here. And then it gapped up. Look at that, bullish weekly, monthly. That was your no-brainer entry right there. The next day over the green bars high. DXC 3150. Hey, now you got my interest. Bottoming pattern. I like when the 20 and 50 both flatten out. Now today's our shock event. That's going in a window right here. That's the best looking one I've seen so far. SIBN, light volume. It's a buy setup. And that's going to be a MT live in 2 weeks. It's a buy setup. And then we can talk about, is that a quality one? It's spotty. I'm just going to get rid of it. RMTI, I can't tell where you're gapping. That was earnings. ICUI, another bottoming. Wow. What the heck is this? $183 stock? Wow, it used to be $320. All right, so this has a big void. This one's worth watching. ICUI, I'll put that there. APYX, I don't like all the overlapping bars and stuff. You're gone. Lin 205. It's a bullish gap up, but it's too extended. I'll come back to it. Go 3240. That's worth watching, maybe 30-minute high. It's slopping around pre-market. It was a takeover rumor. This poor guy, look at that. Bearish gap, no bounce. It can't get 2 green bars in a row. Unless there's a shock event and they can get above this base. Look at that. That thing looks like it's going much lower. That's in pain. TTOO. Light volume, trading range. Bearish gap here. 30-minute low, that would be a short, but I don't short $2 stocks. Read on 214 and change. Wow, look at that gap. Now I know myself, I would have said on this gap day that the gap's too big. I'm not messing with it. But then look what it did. That is still strong, but it doesn't meet my pitch, a baseball pitch. Our patterns are the pitches that we're looking for. Poor overstock. This looks horrible. Keep that on our short watch list. OCUL 280, another cheapie. GTT, gapping to $7. If it can't bounce, 30-minute low maybe. FTSV. I don't know what to do with that. You're gone. Edit 2086, gap into resistance. You're gone. CBS, we looked at earlier. Cala. So many cheap stocks here. These must be earnings, is why I put them in here. 537, no pattern to me. Look at those. That's a great moving average example too. Let me write myself a note. Because what I want to do, and I gave you pace C yesterday. If I were to take off the bars, the candles, look at that. Look, 20 and 50. Look at that. As soon as this starts to roll over, 50 flattening out, that's where I'd be shorting it. If I were still in it, I'd say, well, the 20's flattened out. Go ahead and, cover half, but it's still in a downtrend, looking at the 50 and 200. SCON, you're a 20-cent stock. I have zero interest in you. Sage, that's a 1, 2, 3 from a trading range. Now, if it were like to be gapping up to 150, for example, then it would be a beautiful day trade long, but it's gapping down here. We'll come back to it. Rock, $202. Wow. Wow. That's military stock. We'll see what that does to the sector. Gap into $7. This, I already saw this. I said this one could be a 30-minute low. Gap into $40. Maybe there's a price void. This could be a 30-minute high candidate for a day trade. INFN 595, it's gapping up to here. That's a mess. You got that big old topping tail. NOG, another $2 stock. Lower pre-market, CLNE. That's another cheap junk. 80 cents, no interest. Housing stock 54.70. That's a bullish gap, but need a pullback. Look at this disaster. 50% haircut to all-time lows. Look at that IPO here. It was 50 bucks and now it is 3. Can you believe that? I mean, buy and hold. It's just such a stupid concept. Another cheapo, you're gone. This one's been strong. Here's your beautiful, beautiful entry right here. Your gap up from a 180 reversal right there. Look at that. That's just a no-brainer entry there. And then you remember step 2, you go down to an intraday time frame. So whether it's 5, 10, 15, 30-minute high, double bottom, whatever the case. AAP 158. Oh, that's a bearish. This is a bear call credit spread setup. I'll keep an eye on it there. And that's the auto parts store, right? So we want to check his brothers, ORLY. Wow. ORLY is holding like a tank. And what's the other one? I don't ever go to those stores, so I don't remember them. Orly and AAP. There's a third big one. I forget the symbol. EBIX. That's a big ugly gap, but it's too big for me. Yeah, GPC. There you go, McGraw. Genuine auto parts. There you go. I knew you would come through. There was your entry right there on that.